Market outlook. Week 43. Markets were defined by a distinctly defensive risk posture. Quantum data analytics stayed on the sidelines and issued no research signals. Three macro narratives, each directly relevant to digital assets, dominated. First, US monetary policy. Fed Chair Jerome Powell indicated the central bank could end its balance sheet runoff in the coming months. That shifts the debate from how restrictive will the Fed remain to when does liquidity begin to normalize? At the same time, labour market perceptions continue to soften, not a collapse, but enough to reinforce the view that the rate peak is in. While the outlook since the September meeting has barely changed, the combination of cooling labour dynamics and a potential pause in quantitative tightening is one of the most constructive signals for risk assets in general, and by extension for digital assets. Second, the US banking situation intensified. What looked like a sector-specific issue is increasingly touching parts of the private banking segment. Refinancing costs, unrealized losses, valuation pressure, all within higher funding conditions. For digital assets, that cuts both ways. In the short run, banking stress dampens risk appetite. In the medium run, it strengthens narratives around alternative market rails, open settlement layers, and diversified liquidity venues. Third, the tariff and trade policy cycle moved into a new phase. The US-initiated trade conflict with China is escalating. China appears advantaged in selected segments, rare earths, battery chains, and the scaling of new industries. For digital assets, this means macro correlations do not run only via rates and growth, but increasingly via supply chains, technology locations, and capital flows. When trade barriers rise, global allocation becomes more selective. Risk-on windows get shorter and trend phases more fragile. In price action, that showed up in elevated Bitcoin dominance and subdued sentiment. When growth worries and financial stability are questioned at the same time, investors prefer quality, within digital assets, typically BTC, and to a degree, ETH. Alt segment rallies were scarce, rebounds brief, and order flow driven. That is precisely why quantum refrained from activation. Capital preservation over activity until data again deliver setup quality. The week is data heavy, starting with China rate signals early in the week, inflation prints from the UK and Japan midweek, flash PMIs for EU/UK/US on Thursday, and the rescheduled US CPI on Friday. For digital assets, sequence matters, sentiment first via China and the Asia session, then the global rates narrative through CPI. Finally, the growth lens through PMIs. If PMIs soften while US CPI is moderate, a short-term relief window can open on the funding side, but only as long as new banking or trade shocks do not emerge. Conversely, stronger price impulses in energy or services could lift real yields and compress risk tolerance again. Structurally, market breadth remains narrow. That argues for sequential moves, BTC ETH first, followed by selective alt exposure with clean liquidity. Options metrics around Thursday, Friday are pivotal. Gamma flips and funding swings can exaggerate moves, particularly in the hours after releases. The lesson for digital assets is clear. Timing windows beat direction. The setup arises not from a single print, but from the combination of signals within roughly 48 hours. Signal settings at Quantum Data Analytics. This is not investment advice and not a solicitation to trade. We describe our internal approach in a research context only. For week 43, subject to the actual data, we plan selective activation with a BTC ETH focus, reduced automation, and stricter quality filters. Position sizes remain defensive, stops are well defined. Re-entries are considered only with confirmed breadth. Alt exposure is taken only where liquidity is sufficient and macro triggers sustainably ease. Around the data windows, we maintain hedging optionality to buffer abrupt volatility. After the releases, we reassess funding, basis, and order book depth. Only then do we scale activity stepwise. Disclaimer: past performance is not a reliable indicator of future results. Digital assets are highly volatile and can result in total loss. Our remarks serve informational purposes only. All decisions, executions, and risks remain solely with the account holders. Quantum data analytics: analytical, strategic, innovative.